How's it going, everyone? We're still surviving here. We're flued up. Little bit of flu never stopped anyone. We got earnings to talk about. I'm gonna try to keep it a little bit shorter because the coughing does not stop when I start talking. So that's something we're gonna focus on. There's definitely several good companies we want to talk about. It's a great time. As most of you know, the first week in the earnings season typically is one just loaded with financial companies. And these aren't necessarily my expertise, but we will talk about some of them in terms of expectations and what we might be able to expect. I know a lot of people are invested in financials a good bit. I don't have quite as much in terms of financials, in terms of diversification, besides just broad ETFs. So that's one thing to consider. But let's get into this thing, and there's really two main stocks that I will be focusing on, I suppose. We'll be talking about plenty else. So Monday starts the trend before open of HDFC Bank. Nothing crazy. These local banks, I mean, there's no real way for me to give an estimate on any of these smaller bank chains or local banks. There's no way. But when you get to the bigger ones, you talk about before open Tuesday. We've got Goldman Eat My Sacks. We got Charles Schwab. Look, it's great stuff. BNY Mellon. These are great big banks, okay? And there's a lot of things to talk about with them. So, I will obviously reference what we saw last week in terms of earnings, which included Wells Fargo and Citigroup. Not necessarily the same, but, that's okay. It gives us kind of an idea on what financials might look like. Obviously, a little bit different when you're talking about Goldman Sachs and Charles Schwab, obviously, because we're going to be talking about investment, too. Obviously, investment assets are going to be pretty essential when you talk about these companies, and we've had a very, very rough time in the market where we've seen quite the shift away from really tech as a whole, as you see the NASDAQ getting plummeted this quarter. So what does that mean necessarily for that? Is volume down, or they're going to be lower in terms of assets under management? We'll see what that looks like. But you look at Wells Fargo, this gives us an idea of what some of these financials might do. Wells Fargo posted a beat both on a revenue and EPS standpoint, so that's solid. Quite a bit over expectations for EPS. And the revenue was really nice too. A nice beat of $2 billion on the revenue. Now from Citigroup, not necessarily quite as much. Revenue came in over estimate by around $200 million. And an EPS line was short by 11%, a little bit weak. $1.46 versus $1.64 expected. Otherwise known as, if you're dyslexic, you wouldn't know the difference, okay? They might be the same thing. So that's about that. When we talk about stuff like PNC, BNY Mellon, First Midwest Bank Corp, you talk about these companies and really these bank chains, and you might expect similar numbers. What's going on for them? Well, we see, again, you got to talk about how the economy's doing. Right now, it's hard necessarily to see massive impact, but we talk about the impending rate hikes, and they will benefit these banks when we talk about longer term, but they're not necessarily something that's going on right now. So you're going to see a lot of activity in terms of refinancing of houses. That's certainly going to be something that's been done a lot in this quarter, because people are going to want to refinance their houses before we see rate hikes, and fast and furious rate hikes apparently, according to many analysts, as well as even just, Jerome Powell himself said there's going to be 3 this year, so keep that in mind. After close, we've got Progress, JB Hunt, Concentrix, Interactive Brokers. Again, another brokerage there, a little bit different, obviously, mostly focused on the internet aspect of it. So it's one of the non-legacies, I suppose, is fair to say. United Community Banks, Pinnacle Financial Partners, and Fulton Financial Corporation. Again, we're riddled with financials, so if you're into financials, you might love this week. Wednesday before open, obviously worth looking at Bank of America. Um, Expected to increase numbers year over year. Will they be able to do it? I mean, it's hard to say. Again, I can't necessarily put a direct line on how these banks are going to do. I feel better about maybe judging like a Goldman Sachs, Charles Schwab, and here a Morgan Stanley on the investment aspect of it, but don't necessarily feel like I can call the banks winners or losers quite yet. We have ASML, United Health Group. I don't think there's anything really impacting the health insurance game right now. Nothing that'll impact it as of this quarter. As of the next quarter, insurers are going to be paying for at-home COVID tests if you buy them. So that obviously is going to be impacting them in terms of a profitability standpoint, but that doesn't impact this quarter. Procter and Gamble is one of the stocks I wanted to focus on solely because, well, consumer staples, I know that. I know these companies. They're expected a $1.66 EPS versus $1.64 again. Nothing crazy because it's Procter and Gamble. They just do what they do. I am quite impressed though. They're actually supposed to show an increase in terms of sales. It's a low single digit, 19.74 a year ago. They're expected 20.38. Obviously, the products were in very high demand last year and the year prior, really. But to see continuous increases, it's pretty nice for them if they're able to do that. The stock doesn't move a lot because it's Procter and Gamble. But again, when you talk about people shifting out of the higher risk stocks and going into some of these more value plays like Procter and Gamble, it's relevant. It's relevant because you could see more people buying on as you get good earnings. And if you get bad earnings, they might avoid the stock. Fastenal, U.S. Bank Corp, Prologis, State Street, and Comerica. Sorry, trying to not die here. After close, Alcoa, United, Kinder Morgan, Discover. When you talk about the credit companies like Wells Fargo again, you saw numbers that were pretty nice. But then, yeah, I mean, Citigroup, not so much. So it's kind of hard to say what you expect for Discover because we got both sides of it. We've got profitability beats, then we have one that missed by quite a bit. So Discover's kind of up in the air. I don't know what it looks like. And in terms of credit spend, and again, we're still at a time where U.S. families have ridiculous amount of savings lined up right now. We're still at that time. And that's why a lot of people aren't working still and they're out of the labor force. Was because of a lot of increased stimulus we had, obviously, over the last couple of years. And people start working. So credit spend isn't necessarily getting everywhere where it needs to. This is going to be a huge quarter for them. Being that it's Q4, obviously the biggest quarter spend in terms of credit, because people are putting all their gifties and stuff on there. How does it compare? Well, holiday shopping as a whole did good things, okay? It did good things. We saw great increases in retail sales indexes. That should benefit these companies. H.B. Fuller, I'm going to hurry this one up. Wintrust Financial, Sterling Bank Corp, FNB Corporation, what the heck? Umpqua Bank. What's going on right now? Again, all these local banks. I can't make really an estimate on these local banks. I can't do it. Look at me. I'm not doing it. Thursday before open. American Airlines. That's one worth talking about. Look, these airlines have had they've had a rough time. We're seeing issues again where travel might be having a bit of a slump, okay? There could be an issue with people traveling. Most people, I think, just don't care. But we had the resurgence, obviously, of Omicron. Very much good for us, by the way. Not a deadly strain, which is fantastic. Very contagious, though, so that might be deterring people. And with that, you saw it the year prior, they're going to have profitability misses big time because they lowered ticket prices. So it could be rough. I don't know. I really am interested in looking at these airline stocks as far as earnings this quarter, especially next quarter. But this quarter we'll see where it got impacted at least. Should only be about a month and a half of this quarter impacted by it, so we'll see. I don't know if it's really going to show up all that much. Baker Hughes, Union Pacific. Travelers, insurance game, don't know. Again, we don't know on the insurance. KeyBank, Fifth Third Bank Corp, fun stuff. Regions Bank, Synovus, Northern Trust, and M&T Bank. Look at these banks, baby. I hope you're excited because this is exciting stuff. After close, Netflix, obviously one of the focus stocks when you're talking about stocks to look at. Look, this company is expected 82 cents of EPS compared to $1.19 of a year ago. That is a rough one. But they are expected to grow revenue by 16%. Expected $7.71 billion versus a year ago $6.64. My expectations with this increase in terms of, or really decrease in EPS is going to be because of spending on content. We'll see what it looks like. On the year, they're expected to grow big time in terms of EPS, so I'm not sure what this quarter's all about, but hopefully they can beat that line. What's really the focus on Netflix is going to be subscriber growth. They expected an $8.5 million increase this quarter. That's going to be darn hard to do. And if they don't hit that, this stock's going to be in for a rough time. I'm not excited to see what happens because, again, this is... you look over the last month, and this is one that's been hammered. I mean, it's just been hammered. This thing was over $600, now sitting at $525 as we speak. It just in the last month. So it's pretty rough right now in terms of these tech stocks. So if they're not able to hit estimates on subscriber growth, look, this thing's going to continue to sink. It's going to be a scary one if you're a Netflix shareholder. Just keep that in mind. Intuitive Surgical is always a great company to look at. Again, we're getting a little bit of an issue. The fantastic part about Omicron, not many hospitalizations. Really very rare to see a hospitalization or any serious cases. The reason I say that is because Intuitive Surgical is mostly focused on elective surgeries. And we've had an issue during this entire 2 years where people weren't able to get elective surgeries because half of hospitals were taken up for COVID patients, and even if there weren't any in the hospitals, they were still reserved for them, and they wouldn't do surgeries on people, or there'd be massive waiting lists. So that's kind of impacted Intuitive Surgical because a lot of these hospitals haven't had the money to purchase their products, right? Their machinery hasn't been able to be purchased because a lot of hospitals are running big deficits. They had to fire a lot of their staff. I mean, it's just looking rough for them. So it's something to consider. And as we kind of get out of this, it's going to be good for them because they'll start catching up on things that they weren't able to buy, different types of either parts for their machines that already exist or just entirely new machines in general. So we'll see what that looks like. CSX, SVB Financial Group. That's right. PPG Bank, OZK, Limelight, baby. Metropolitan Bank Holding. Then Friday, before open, we love Schlumberger. It's just a great name. It's just a great name. Ally, another financial, but it's a nice mix where it's one of those all-in-one financials at this point. It's kind of crazy. They offer a very high yield savings account right now. I mean, it's a ridiculously high, and I don't know how they do it. I forget. I didn't look into it because I saw how high it was. I don't know how they're able to do that, and obviously that's going to impact their profit line because of the fact that interest rates aren't that high. So how are they doing it? But yeah, that's interesting. Probably incredible fees, I would presume. That's kind of how banks usually do it. Which, by the way, that being said, Bank of America did cut their overdraft fees by quite a bit. So we'll keep that in mind as well. But yeah, that's relevant for Bank of America. But not really this quarter, but next quarter. So, nothing crazy. And then HS Market and First Hawaiian. Don't forget Huntington, by the way. That's what I got for you. I'm gonna go sleep.